Good evening, everybody. This is Eric Foster. Wanted to do a video separate from my Future Today and Tomorrow Super PAC videos to speak to the work that I do with Cannas Capital Holdings as the board chair for Cannas Capital Holdings and the lead point person on the policy side of the Cannas Capital's cannabis bank black cannabis compliant banking and capital solution product. So I wanted to talk about in terms of the cannabis industry and what the industry is facing regarding access to capital. There is a structural challenge that the industry faces with respect to being able to access financing debt instruments, if you will, so that the industry can invest in normal business operations, marketing, bringing in consultants and experts to help with the operations and help run the businesses more effectively and efficiently. The situation we face at the federal government is pretty clear. We don't have a federal legalization program in terms of a statutory bill that has passed or is going to pass. We've had bills that have passed out of the House when the House was controlled by a majority of pro cannabis legalization Democrats with some Republican and MAGA Republican votes. Since MAGA Republicans are in charge of Congress, nothing has passed the House. And now that they're in control of the Senate, the likelihood of anything passing is nil to none. There's a myth out here in the streets that somehow, because Donald Trump is in the White House and he said a few nice things about cannabis, that he is going to be the leader and the champion beyond what President Biden was and what his administration tried to do. To me, the evidence is pretty clear that that's just fantasy and foolhardiness, but I'm not going to get into a lot in this particular video on that. What I want to focus on, though, is what states can do, because absent of that federal program, we do have banks and financial institutions that do business with marijuana related businesses, and that's in part because of two things. What was the Rohrabacher-Farr Amendment in the Department of Justice appropriations budget, which is under the Commerce, Science, and Justice budget, one of the 12 budget packages that have to pass through Congress, or a continuing resolution that has to pass through Congress to keep government functioning and funding. Continuing resolution is basically like a payday loan, but it keeps the terms that you had from the previous relationship in terms of a full appropriations bill with all of the 12 pieces added in functional for the next year or next 3 months or next week, however long the continuing resolution payday loan approach is scheduled to last. But since we don't have, so because of that and because of 2014 February Department of Treasury guidelines on banking with marijuana related businesses and a 2015 guidance from the FDIC in conjunction with the Federal Reserve on depositing with at risk deposit relationships, which is the typically the cannabis related businesses. That gives the framework and the structure. And roughly 25% to 30% of the financial institutions around the country do business with marijuana related businesses. Now, of that number, if it's 100, and I'm just throwing out here, so you say 30% of the overall industry. So within that 30%, if you're looking at it as 100, maybe 6 or 7% of that total universe that's doing business does lending products like you would do with lending to other businesses. Most of those do lending based on real estate and property and capital assets that can be leveraged. There are a smaller number that do loans based on the business, the structure, traditional unsecured debt instrument lending. What has happened is that there have been a couple of states that have, in their statutory laws, created systems where the state will either back the lending through loss reserve or through a sort of SBA guarantee type program, along with in the state of Illinois, where the state will actually deposit part of its cannabis tax proceeds into the banks that are willing to do business with marijuana related businesses. So think of too big to fail, the capital infusion that went into the banks during the mortgage meltdown to get them to start lending again. Well, it's kind of that same sort of approach. We put money in you for you to do business with these businesses and hopefully do lending services. And then we have in Illinois a separate program where either we do direct lending or we will support with guarantees for you to do lending. And so if they default, you don't lose all of your money. Overall, it's a good approach and it's the right way to go. And so, one of the things that's going to happen is more states are going to have to go forward in this sort of approach. And that's where we at Cannas Capital and the Bank Black solution come in. Because if you set those up, you still have a barrier for minority owned small business that would normally qualify under SBA, social equity, and justice involved businesses that are licensed with them having the ability to get approved. So in Illinois, in Maryland, and then conceivably in states that have the structure in their statutes like Connecticut and Virginia. Connecticut's coming online, Virginia is stuck because of the governor MAGA in a sweater vest Youngkin. You still have to address how are people in these groups I mentioned going to get loans. And so the Bank Black solution, and Simone, who is the CEO of Cannas Capital, my friend, and who I've done videos with, she breaks down and knows because she structured it with the team, all of the technical aspects, me giving it from a policy vantage point. It's basically the bridge that creates the structure for those businesses to apply for lending that's supported by the state with the bank financial partners, but takes into account factors that would give them the ability to get approved for lending that normally they would not be able to get. So ultimately, if you're going to do this, you want to make sure that the structure, when it comes to the risk, when it comes to also tools to help support that business to stay open, grow, and be a viable 5 year or longer business, you need those supports. And that's where we come in. And so it fits within the middle and connects between the lendee, the bank, and the state, usually their Department of Treasury or their Department of Commerce, that's involved with their cannabis regulatory agency and their Office of Social Equity or Office of Minority Business Ventures or their supplier diversity, whatever their programs are to help minority small businesses in the state. Those are involved as well. So ultimately, this is the way that states are going to have to go. Because since we don't have anything coming at a federal level to open up a door and provide support, we need more of the states of the 39 that have allowed adult and or medical or both to operate within their state borders. We need them to join Illinois, Maryland, Connecticut, and Virginia in adopting these sorts of approaches where the state will sit in like the SBA or the Department of Treasury or the Federal Reserve and be a market influencer that helps create a lending structure for these businesses to be able to access capital and to provide a structure for the banks and credit unions to be able to plug in and have some support, especially if they're going to do lending, where they have the ability to have a loss reserve they could tap into or guarantees that cover any defaults. Because a bank does not want bad performing loan products. They want good performing loan products. Good performing loan product is basically you borrow the money, you pay it back, and you pay it back on time. That's a good performing loan product. Just like if you loan to a family member, a good performing family member is somebody who actually pays you back the loan. A bad performing is one of them, we all got some of those family members who just, leave you hanging. So, all of that being said, that's the approach that we at Cannas Capital are taking and where we fit in this particular marketplace to be the entity to sit in the middle and work with the licensees, work with the state, and work with the financial institutions to create a equitable lending structure so they not only have the ability to get approved and have things considered that normally aren't considered to build a portfolio of who this business is, but also additional tools to help them when they get the loan so that they can do right with the dollars and they can continue to grow that business intellectually in terms of their operating capacity to be successful. So I'm gonna be quiet because that's enough. I done talked a lot, and so I don't want to be the one that's just kind of, even though it's just me doing a lot of talking, but ultimately that's what we are doing, and that's why it's important for states to step in and be the facilitators of these programs because it will help not only the small business licensee, the white licensee, it'll help the Black, Hispanic, Native American, Arab, Chaldean American, Asian American, Native Hawaiian, Pacific Islander, and multiracial American. It'll help persons who are social equity or justice impacted. And it will conceivably, if grown the right way, will help the corporate cannabis companies. This is the model that I believe will sustain this industry by providing it a capital vehicle to help the industry invest in itself the right way without predatory lenders and predatory financing options that exist out here in these streets. There's a lot of those predators in the streets. You don't need predators preying on this industry. So hopefully as I kind of go forward, I'm going to do more of these to go along with some of the written stories and articles that I've written on this approach, because ultimately, this is the way, if we're going to really stand up this industry and we're going to keep it going so that it survives 5 years from now, that we have to take those steps. And state governments are going to have to be the ones that step in and really push this forward. All right. So thank you all. Have a blessed evening, and I will talk to you later.